This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. There was something about episode 667 that I really liked. Professor from Duke, and we talked about a concept called preference falsification. In a nutshell, to restate it, people don't tell the truth. I mean, if you ask people a poll question, most of the time they'll tell you the truth, but not always. So there's this variability there. And I thought to myself, a few days later, after the episode went live, I thought, why do people love polls? So you're going to have an election. People are going to vote. That's concrete. That's like the traded price. It's done. It counts. But why the preliminary? Let me be frank here. Why are we jerking ourselves off to actually think that the poll will correlate, will be the same as the election day result? How did we even get this into our mind? And I think if you can allow yourself to think about that example, the idea of, oh my gosh, look at the polls. The polls are telling us what's going to happen, and then the election happens and the polls didn't tell us shit. If you can let that out of your mind and be more of a scientist about it, and just trust the data and trust that you can't predict about damn anything, you're much better off. This desire to predict in a world that is so chaotic, so constantly in flux, all you can do is make bets and get on the right train. But you don't know the right train. Yeah, you're right. You really don't know the right train. You got to get on a train. You might not find out it's the right train until the ride's over. And if you go 2 or 3 stops and it's the wrong train, you better get the hell off or you're going to waste a lot of time and a lot of money. Clearly, I am talking about trend following when I use those examples. But I really don't understand this deep desire that people have to believe in polls, this fantasy. Maybe big media has just developed this great propaganda tool that gets eyeballs and clicks and all that kind of stuff. But it's pointless. And if you can allow yourself to just concentrate on what matters, for example, the election day results, the price of the market right now, the price, the true price, not the prediction that some guy in CNBC or Bloomberg tells you what's going to happen. That's kind of like the poll, isn't it? Why go there? It just doesn't work that way. And if you can believe me on that point, you're halfway there. Like if you can allow yourself to not be preoccupied with the nonsense that's going on, the cacophony of voices, the constant stream, the flux that's coming at you all the time. If you can let go of that, you're so much better off. It's more a peaceful life. I just got back from Hong Kong, and speaking of not peaceful, Hong Kong is awesome in many ways. The infrastructure, the bridges, the buildings, it is an amazing, and I've been there many times, it's an amazing testament to human ingenuity, just to pull off that thing. But my gosh, so many people in the rat race, so many people putting that suit on every day to go and try to make their bread from the man that says sit there at the computer and operate. I stayed at this nice hotel right down in Central, real close to the escalators, a well-known name that I don't need to mention, but I could look out the window and the office towers next to me. And every day, they're lined up, just sitting there grinding it out. That's not peaceful. It's not my cup of tea. I don't think people that listen to me, it's their cup of tea either. Now, don't get me wrong. Everyone has to start somewhere, and some people start there. The trick is to start wherever you are, make it your way however you need to get to that point where there is some freedom. Now, sitting in that office desk in Hong Kong or New York City or London, sitting there every day for 30 years, my gosh, that's enough to take decades off your life. I just can't imagine it. But Hong Kong is very cool. If I could eat dim sum every damn day. Look, here's my breakfast. This is what I want for breakfast every day. I've decided now. Eggs, bacon, dim sum. I'd be happy. And if you're sitting out there right now and you've never had Cantonese dim sum, please, my gosh, would you get off your rear end and expand what goes in your mouth? Because that stuff is the bomb. And again, marry it with eggs and bacon for breakfast. I'm in heaven. I might not be in healthy heaven. I might be in healthy heaven. I don't know. But as long as I don't eat too much of it, I think I'm fine. I was in Hong Kong, kind enough, via an invitation from Porter Stansberry of Stansberry and Associates. Porter allowed me to speak to his audience. And I generally have a little rule with myself. If reputable people ask me to come speak to a reputable audience, I go. Why not? I love sharing information with people. I love getting questions from people. I love just sitting down and learning from people. I had some great conversations with a couple of older dudes sitting around the bar, I think on a Friday or Saturday night. We talked for hours. These guys were really interesting, older American guys, probably retired, probably multimillionaires, but really interesting guys. I thoroughly enjoyed the conversations, really. That kind of stuff is just fun to me, to get out and kind of, mingle and see and talk to people that have been different places, been down different lives, share. Why not? But Porter was kind enough to give me the stage, and as I just said, I will always take those stages. What follows next is actually an interview that Porter conducted of me a few weeks ago. It appeared on his podcast, but I thought, we've probably got audiences that don't necessarily overlap, so I wanted to replay it here now. A good conversation from a value perspective, that would be Porter, and a trend following perspective, that would be me. So give it a listen. I hope you enjoyed this conversation.
Where are you joining us from today? You're one of these folks who seems to always be somewhere new in the world every time we speak.
I'm in Saigon today.
You sound crystal clear. You must have some kind of wicked, expensive internet connection.
I don't think so. I stay at a pretty cool place, and it's just whatever standard they've got here. Sometimes the connection will get a little whacked out, but it works pretty good.
I just want to say I love Saigon. I actually think it has some of the best food in the world. I'm a huge fan.
Absolutely. You can get just about anything here. You can go Vietnamese all day long. You can go Italian all day long. You go Japanese all day long. Doesn't make a difference. Great hamburgers.
Well, I got to ask before we get into the finance stuff, what led you to Vietnam in the first place, and how much time do you spend there?
About 80% plus of the year for the last 5 years. I was living in San Diego, and I got hired by a Hong Kong bank to give a little speaking tour 5-6 years ago. I was in 10 plus countries, 25 plus cities, giving presentations all over. And at the end, I was like, well, heck, I'm not going back to the States. And I said, where did I have the most fun in that 4-month stretch? And it wasn't a choice. It was Saigon.
That's great. I'm amazed by how many people I know that have gone to Asia and never come back once they discover the quality of life and the freedom that you can have there, particularly as an expat. Let's get into the finance. There's something about trend following that I've just never been able to wrap my brain around. And you'll have to forgive me, Michael, because I'm probably a bit of a dinosaur. I see shares and stocks, and I know you trade lots of things besides equities, commodities, currencies. I see stocks as being a part of a business. And as such, I see the value that is built over time by adding new customers, building new profits, reinvesting dividends, repeat. And particularly as a small business person, I know that's how it works. And I know the valuation of the company is a reflection of that. Obviously, my businesses don't trade on the public markets. But even if they did, I wouldn't really care very much about the share price. I'd focus as an entrepreneur on the underlying intrinsic value, getting more customers, earning more profits, and reinvesting in the same. You as a trader, you have a whole different view. What you care about is the price. You care about the price on the screen, not really the underlying value. What I want to ask you is there any way to connect those two concepts? Is there anything about trend following that you think is caused by the underlying business or impacts the underlying business?
It's a great question. As you were laying that out, I was thinking they're not mutually exclusive. It doesn't have to be all one way. Because what's so great about a trend following strategy combined with what you just described, a value strategy, if you combine the two, you get more return and less risk, because a typical trend following stream of return is correlated with the value stream that you just described, generally at zero for the last 3, 4, 5 decades. That's the real value there. It's an entirely different way of looking at the markets as you describe, but the benefit is it just makes its money at different times compared to the value strategy that you outlined.
Let me see if I understand you correctly. What you're saying is that the trend following is a reflection of the value that's being created, but it's either racing ahead of it or it's trailing behind it, one or the other.
No, I guess, as a trend following trader, I don't think about value at all. I mean, I'm having that conversation with you because we're kind of like trying to flesh this out for people. But, a trend following trader says, I don't have to know anything about the business that you're giving an example about. I don't care. I just want to know what's the price and has it moved? I'm going to apply this across a portfolio. You're almost like a venture capitalist for trading the markets. So you're going to say, you know what, I'm going to place 20 bets here. And somebody out there on Sand Hill Road in Silicon Valley is doing the same thing with their angel investments. We're going to place 20 bets. And maybe 18 or 19 of them are going to bomb out because we just don't know what's going to happen. And 1 or 2 of them are going to become, Google or the next Uber or whatever, which will pay for all the companies that didn't work out, and then you'll end up with your home run. So it's very much a venture capital mindset. It's a great way for your audience to think about it.
You're saying clearly there is no relationship between the way that I would look at the market and the way that a trader like you looks at the market. And by the way, I'm not saying that there has to be. I just wondered if there was any in your mind, and I'm glad to know that there's not. That kind of makes it easier for me because I've always been trying to figure that out. And I'm looking for a relationship that you don't think exists. That's helpful. So if what you do, therefore, is primarily in the market, not outside the market. In other words, just stop talking about my companies because they're not publicly traded. Let's talk about a big company that everyone's familiar with. Let's just say Microsoft. If you were going to do a trend trading strategy on Microsoft, for example, you wouldn't be looking at all for what the earnings are forecast to be or what the new product developments were or whether or not there's going to be a new deal with Uber or something like that. You would solely be focused on what is happening in the price and in the volume action of that stock. Is that correct?
The price, actually. The volume would really not be an issue. But here's the tricky part about what you just outlined. You really can't be a trend following trader on one market alone. You'll see people come on TV and they'll talk about technical analysis and they'll say, hey, I can look at this cross, this death cross, and this means such and such will happen. And they apply that thinking to one market. That's not trend following. I don't know what that is exactly, but trend following is more, hey, we've got to have a basket of things we're following, a basket of different markets, hopefully a basket that's not really correlated amongst each other. And then we're going to take simple signals like breakouts, moving averages to get in, and we're always going to have a tight stop because we don't know what's going to happen. We're going to take a position. Hopefully the market's going to go our way, but we know we're going to have 60, 70% losers, and we're going to come in with the big hits. It's a very different way of thinking, but it works well, and it's worked for a long, long time.
So let me ask you a question about that. Would you say most of your profits accrue because you found the right trend and it was very powerful? I'm just making up an example. But I know that, for example, commodities in particular can have huge moves following breakouts. You follow the price of corn and it doesn't go anywhere for 7 years, and all of a sudden it's up, limit up 3 days in a row, and you happen to be in that after the first or second day or something, and it goes on and makes a huge return. Is that where your returns come from, by finding the thing that's trending really strongly early? Or do most of your profits actually accrue from just your trading techniques? In other words, the fact that you cut your losses quickly, the fact that you let your winners run? Or is there a mix?
It's really the cutting the losses and letting your winners run, because you really can't predict a trend, or you really don't know a trend has happened until it's over and you can look back and measure it. So, if you start the hypothetical year one as flat, you have no positions, and you say, okay, I don't know where my profits are going to come from this year. It could be crude oil, it could be corn, it could be Tesla. Who knows? And you don't know until, frankly, the end of the year is over and you can look back and you say, my gosh, that trend in crude oil, that paid for everything. We made a bloody fortune that year. It would have been nice if all those other markets didn't crap out and didn't all become small losses, but hey, that's the name of the game. Once again, it really helps to kind of keep that venture capital mindset, that kind of card counting MIT mindset. It's all about finding your edge. What's the edge that you can bet on?
This is where, my brain just comes unraveled about this. I had an idea what your answers would be. Obviously, we've spoken many times before, and I know the basic tenets of trend following. Here's my dilemma. I'm a free market capitalist, and I believe that the markets serve a purpose. I'm not saying that they're efficient, but I believe that they have value in and of themselves and that they help direct capital. For something that requires capital where the prices are still high and profit margins are still very good potential, that's going to attract capital even if it doesn't have earnings yet. And that's why the stock market is so important. It allows people with a good idea to raise capital even if they don't have earnings or profits yet. And that is important to the economy. It helps the American economy get ahead of other economies because we can raise capital for innovation and other folks can't. That's one example. There's lots of examples about the way that markets function to allocate capital. I'm not going to go into all of them. But the thing that really I can't get my head around with trend following is it seems like it doesn't participate in any way in that function. In fact, it seems like trend following takes advantage of where markets are wrong more so than taking advantage of how markets function. Do you have any comment about that? Has that occurred to you that the big profits in trend following almost seem to be like mistakes that markets are making?
I must say that my alma mater, George Mason University, has become the hotbed of libertarian free market capitalism these days. I think I've had 6 of their economists on my show. We share that foundation. I think one of the things to think about, though, too, is if you go to Chicago, right, and you look at the futures markets, and the futures markets are a zero-sum game. And so speculators coming into that market, they serve a purpose because not every person that's using, for example, a futures market is in there as a speculator. There's hedgers. There's people that are in there hedging. I've had a guy who's appeared in one of my books who laid this scenario out to me. This is how he viewed it. He actually came at the idea of like, hey, hold on. All these hedgers are coming to the Chicago futures markets. The big companies that you're talking about, the big value companies you're talking about, they're coming to the Chicago futures markets to hedge their positions. And this guy didn't know anything about trend following, but he figured out, how can I trade in such a way that when these hedgers are giving this money, essentially buying insurance, how can I collect their insurance? In many ways, it's not too dissimilar to how Mr. Buffett's made his fortune, at least in the insurance type thinking.
Yeah, we do a lot of the same thing. I do think that selling puts, if you can understand that and master that, it's by far the best way to be an equity investor. I get the idea of capturing the insurance premium that's in the market, and that's maybe one interesting way of understanding trend following that I hadn't thought about. We went off on a pretty philosophical track early in the questioning because those are the questions that I've always had. But let me ask something on behalf of my readers, and I know this is a question you get everywhere you speak, but let's say you're talking with a guy who's got $100,000 saved. He wants to see if trend following will work for him. What's your most basic introductory strategy for a new trader?
So that answer has changed in the last 5 to 10 years because so many of the trend following traders that I've kind of uncovered and written about have developed fund structures that are no longer the, exclusive QEP stuff. It's like, regular people can participate in ETFs, mutual funds, etc. So your listeners can definitely go out and look at one of my books, look at some of the names, and instead of trading themselves, they can go participate in a fund, as easy as they can buy a share. That's a great option for a lot of people. On the flip side, for the do-it-yourselfers, which there's many people that say, I don't want to pay fees. I want to do this myself. The simple way to really think about it is like, okay, let's get a tracking portfolio of 20 plus markets. This could be some currencies, and you could be trading ETFs, futures, leaps, I don't care. You're going to be tracking some currency ETFs. You're going to be tracking some various equities. You're going to have this kind of tracking portfolio. And a simple way to think about it is like, okay, has the market made its highest high in 100 trading days? You take an entry. If it goes against you, let's just hypothetically throw a number out. If it goes against you and you lose 2%, 5%, you exit. You want to make that a concrete number, but you exit, you get out. And you kind of got to really play this in your mind over time. You just can't jump in and jump out. You've got to have a strategy where you're going to be consistent about it. And you got to look for that edge over time. I would say really for the listeners, look at one of these pros doing it for you. Or if you want to take the deeper dive, and this is not necessarily a pitch for one of my books, but there's many books that will give you a foundation to where you can really have a good basic trend following strategy. But look, there's no secrets here. It's something simple for getting you in, a moving average crossover, a breakout. That's not the key. The key is consistency. You mentioned the efficient market, and I know you don't believe markets are entirely efficient, nor do I. And that gets into the behavioral realm of things. That's why ultimately the behavioral realm That's why these profits exist in different strategies like trend following, because people do crazy stuff.
That's the only thing that's certain in life. The idea that markets could be efficient is as true as the fact that people are rational. My experience is people are only rational by mistake. they're never rational intentionally. Let me ask you one more question, Michael. It's a pretty simple one, and you may want to punt on it, but what is the best market that you personally trade? In other words, if you look back at your 20 or 30 years as an investor using trend following strategies, what market do you seem to have an affinity for catching correctly?
It's a good question. I'm thinking about the way you phrased it. The answer that I would give, though, currencies. Currencies have provided really so much of trend following foundational profits over the years. If currency markets did not exist in the last 5 decades, which exceeds my lifespan, if currency markets did not exist, I really don't see how trend following as a strategy would have existed.
That, to me, is the most interesting thing that we've uncovered so far in this interview. What is it about currency markets that makes them trend so strongly and for such long periods?
Well, that probably gets into some of the fundamental perspectives that you might have. Is that when the proverbial you know what hits the fan, people kind of run for cover. It's one of the reasons, for example, that if you look at a trend following strategy, you can typically see that they do really, really well during black swan time periods, like October of 2008. You know, Ben Stein famously said, if you made money in October of 2008, you were doing something wrong. Every trend following trader made money in October of 2008. It's a complicated question, but I think when things go bad, you know, currencies are the foundational instrument. Whatever we're trading, currencies are involved, and you really get some of these big moves.
That was a really unusual time. I don't remember the details now. Looking back, though, I can remember writing essay after essay about how ridiculously correlated all of the world's markets had become. They were all going down. That was a period of unbelievably strong trends. And if you were a trend following guy, that's manna from heaven. For everybody else, it was kind of terrifying.
And I think you make a good point there in the sense that ultimately, as we said at the top of this call, it's not an either or thing. I would implore people to say, okay, if you've got your core value strategy and it's worked well for you and you have a market hero like Warren Buffett who's done exceptionally well, don't break from that. But does it make sense to have this kind of insurance policy that protects you when the next you know what swims in and bites? And that's where trend following can help people.
Yeah, there's certainly plenty of evidence that actually does work as part of your allocation mix. Adding in the commodity trading advisor component to your portfolio is non-correlated. It will have an impressive dampening of volatility and increasing of returns over time. So, Michael, listen, I want to make sure people understand how they can get more from you. You have 2 books out. Is that correct? The Complete Turtle Trader, and then your second book, Trend Following: How to Make a Fortune in Bull, Bear, and Black Swan Markets.
Yeah, I'd stick with trend following as your first stab if you're new to my world. That's my 5th edition. It's a massive book. Even if you don't read it all, it's heavy enough to literally swing and hit somebody with it and probably kill them.
You look very impressive on your bookshelf, at least.
Absolutely. It's one of those ones you don't throw away because it looks so impressive.
Trend Following: How to Make a Fortune in Bull, Bear, and Black Swan Markets. Now, the thing I haven't ever discussed with you, and I admit I've never seen it, you did a documentary, Broke, The New American Dream, where you interviewed Larry Hite, Jim Rogers, Bill Miller, David Harding, I'm sure a couple of other impressive investors and traders too. What's that about? What's Broke mean, and what is the New American Dream?
Well, so, that was right around the time period we were talking about during the chaos of the crisis. Gosh, it's a decade now. I had this thought at the end, we were having a hard time with the naming, and I thought, well, by the actions that everyone is taking right now, literally they want to be broke. And so I thought to myself, broke is the new American dream. It's like we're taking these terrible actions that are kind of giving us what you would expect if you take these actions. Anyways, it was a 3-year journey on my part, traveling the world, talking with everybody under the sun during that time period. And it was really that kind of free market capitalist foundation, and I just ripped the hell out of the media and that kind of fun stuff.
Any idea where I can find that? Is it on YouTube, Netflix, anything like that?
easy to find. Off my website, Trend Following, you'll see the link, or if you type in my name, Vimeo, it's easy to find, easy to buy.
Trendfollowing.com is your website. You've written 2 great books. We've had an interesting discussion today. I wish you well on your trading, and I frankly wish I could understand it better. I'd be more open to it.
Hey, I always enjoy our sparring. We've been doing it for a long time, ever since Jekyll Island, I believe, so I always enjoy it.
Yep, great to have you on. Look forward to seeing you this fall in Las Vegas. Best wishes.
Thanks, sir. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, Trend Following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.